Hello and welcome to Expert Lounge podcast by India Ratings and Research. I am Shivraj Patil, Senior Analyst from Structured Finance team. In this episode, I'll be discussing about the latest RBI data that talks about the asset reconstruction company sector, security receipts and recovery trends seen in the India stressed asset market. According to the RBI's report on trends and progress of banking in India for the year 2024-2025, ARC's acquisition activity picked up sharply during the year. The book value of acquired assets outstanding by ARCs increased by nearly 58% year-on-year to about INR 16,191 billion. This reflects continued balance sheet cleanup by banks and increasing reliance on ARCs as a resolution channel. However, while acquisitions expanded significantly, security receipt issuance grew at a much slower pace. Cumulative SR issuance increased to around INR 3,209 billion. This indicates that a large part of new issuance was offset by redemption during this year. This also indicates that the widening gap between asset acquisition and SR issuance also reflects a phase where the pricing dynamics is in favor of buyers, that is the ARCs. While acquisition volumes expanded materially, the cash paid by ARCs did not increase in the same proportion, indicating a decline in the acquisition cost to book value ratios. As these deal structures evolve with time, we can see the pricing dynamics stabilize in the long term. But lower purchase price alone won't guarantee superior outcome, especially as a significant portion of the recent acquisitions is concentrated in retail and SME portfolios. The recoveries ultimately depend on operational intensity and navigating the legal and market challenges. Hence, we believe that the sector has entered a phase where disciplined pricing must be complemented by execution capability to translate discounts into realized recoveries. So even when there was a sharp pickup in asset acquisitions through FY25, what's interesting is that the outstanding SRs barely moved. They inched up to INR 1533 billion by end of March 2025 from INR 1451 billion from the previous year. Now, this is despite the fact that new SR issuance went up during the year. And the reason becomes very clear when we look at the redemption activity. A large volume of SRs was actually redeemed over the same period. INRA reads this as a sign of more stable and gradually improving recovery environment supported by steady resolution progress across older portfolios. But there is a caveat to this. To keep this momentum going, there needs to be tighter coordination between how assets are acquired and how recoveries are pursued. On the investor side, the composition has not changed dramatically. Banks still dominate SR subscriptions, holding 58.9% of outstanding SRs at the end of March 2025. But we are seeing a slow uptick in participation from other qualified institutional investors. They have moved up to 13.8% from 13.1% a year earlier. We view this as this gradual diversification as healthy for market depth in the medium term. That said, a broader investor base will probably evolve only bit by bit given how complex the sector is and how variable the returns can be. From a recovery perspective, system-level outcomes have also improved. Recovery rates under the Insolvency and Bankruptcy Code increased to about 36.6% in FY25, while recoveries under SARFAESI improved to around 31.5%. The IBC remained the dominant recovery channel, accounting for more than half of the total recoveries during this year. These trends reinforce the importance of both frameworks in India's recovery architecture. At the same time, the data highlights an important shift. Growth in ARC sector is no longer just about acquisition volumes or SR issuance. Recovery outcomes are increasingly shaped by execution on the ground, including the speed of legal processes, tribunal capacity, litigation management, and operational effectiveness, especially for these newer retail and SME portfolios acquired by ARCs. As ARCs continue to scale and play an increasingly important role in India's NPL recovery system, the momentum seen in FY25 is constructive. However, sustaining this growth will depend on how effectively the sector navigates execution, legal, and operational challenges. Strong frameworks are already in place. The next phase of improvement will come from consistent execution and timely resolution. This brings us to an end of this episode. Thanks for tuning in. For more details, you can view our latest NRAC published on www.indiaratings.co.in under the Research and Publications tab, or you can also reach out to us in case of any queries. Thank you.